Dell reportedly is in talks to buy EMC in what could be the biggest tech deal ever. The Wall Street Journal reporting an agreement could be reached within a week. I'm joined by S&P's equity analyst, Angelo Zeno. Angelo, good to see you. This is an interesting story. EMC, we know, has been under pressure from an activist investor. Would a deal like this make sense for those EMC shareholders?
I think, the answer to that would be it depends on the price. So if we kind of look at the potential offer here, and why EMC is looking to do this, there's really three main reasons. One is if you kind of look at EMC's stock price here over the last several years, it's really been stuck in the mud, and at this point, they really have to do something for their shareholders. I think to your point, we've got that activist investor in Elliott Management, and they're clearly putting a lot of pressure on the company ever since taking a stake last year. And then finally, you've got a CEO in Joe Tucci who's about to exit the company, and there's no succession plan in place. So I think you've got a whole bunch of moving pieces in place, but it all depends on the type of the price that they get in the end at the end of the day.
What's your sense on what price would make sense?
Well, from indications we've heard, you're looking at a floor price potentially of $27. Our 12-month target price is $30, so we obviously would think a price in that $27, $28 range would significantly undervalue the true value of the company.
So let's now take it from Dell's point of view. Why does it make sense for Dell? EMC has its issues. It actually had a drop in profits in the last quarter. So why does Dell want something like this so bad that it'd be willing perhaps to pay a pretty penny?
Yeah, I think what Michael Dell is looking to do here is really create a total, total enterprise technology company similar to what we've seen with HP and the IBMs of the world. So, what EMC does is it'll give them greater scale. It gives them instant, significant market share within the storage arena. And I think the goal here is really to kind of leverage the two businesses and continue to expand aggressively in those markets to gain market share. And I think that's a big reason why Michael Dell took the company privately, is because he didn't want to be in the face of all the shareholders out there and question his thought process. And he's kind of now given full kind of, he's able to do what he wants to do, and that's what you're seeing here.
So what would happen with VMware, do you think?
So the most likely scenario would be VMware would have to get spun out if the scenario were to evolve. We think from a financial perspective, there is no way Dell would be able to absorb the 50 billion plus market cap size of EMC. So a spin-off of VMware would make sense. And if you actually look at the value of EMC, about 2/3 of the value of the company right now is coming from cash on hand and that VMware stake. So it helps reduce some of the financial burden there.
So Angelo, do you think if this deal happens, would there be any other disruptions or follow-on deals based on what we see with Dell and EMC?
In one sense, from other technology companies across the space?
Exactly.
Yeah, I think we're in an age right now where we're seeing not only a lot of deals, despite the recent pause here over the last several months, but I think you're also seeing larger scale transactions. Earlier this year, we had the announcement of Avago and Broadcom, which right now would stand as the largest transaction, pure play transaction ever in the technology space. So I think you're going to see larger scale transactions, especially across the technology hardware supply chain here, because scale does matter.
S&P Capital IQ analyst Angelo Zeno, good to see you again. Thanks.
Thanks for having me.
I'm Rhonda Schaffler for The Street.